The global demand for lithium-ion batteries is expected to soar over this decade, with the required number of gigawatt-hour increasing from 700 gigawatt-hour in 2022 to around 4.7 terawatt-hour by 2030. Meanwhile, India has also recently acquired 5 lithium blocks in Argentina and has earmarked billions of dollars in subsidies for EV manufacturing, renewable technology, and electronics that rely on the supply of critical minerals. What do these developments mean for the lithium metal industry? Join us for a discussion on Twitter Spaces to know more.
Are banks at an inflection point? So far, the loan growth has not moderated despite continuous regulatory actions such as imposing CD ratio limits, keeping the liquidity tight, and increasing risk weight on unsecured loans. The credit growth for FY24 was 16%. This was primarily driven by personal loan growth, while the industrial credit reported muted growth. The deposit growth was 13% for FY24. For 2 consecutive years, credit growth has been outpacing deposit growth. This cannot continue forever. The CD ratio for the latest fortnight, as given by RBI, stood at 77.5% compared to 75.5% year on year. But this is the highest since the previous peak seen in 2018. Banks are struggling to raise deposits and are trying to bring down the CD ratio at the same time. Main concern is the personal leverage in households that has gone up significantly post-COVID, which is impacting the savings in the households and thereby resulting in a lower credit growth. Ratings agencies estimate the credit growth to be in the range of 13 to 14% for FY25. Some of this moderation is expected from the lower loan growth from HDFC Bank and some of the PSU banks. There are signs already visible. Loan growth in the latest fortnight was 15.3%, which is 70 basis points lower than the 16% reported in FY24. Some banks even called out lower credit growth in FY25. Axis Bank foresees the credit growth to converge towards the deposit growth rate of 13% in FY25. Quoting Axis Bank, credit growth is driven by deposit growth and not other way. Quoting Axis Bank, the deposit growth is an important determinant for driving credit growth. The gap cannot continue forever. Banks refrained from giving specific guidance for loan growth in FY25. They continue to maintain their medium-term aspirations. For example, Axis Bank wants to grow at 300 to 400 basis points higher than the sector growth, while Kotak Bank wants to grow at 1.5x to 2x of the nominal GDP growth. Current market expectation seems to be that even if personal loans slow down, the private capex will pick up, which will drive the industrial credit. Will there be a delay in the switchover, or will personal loans continue to grow? We'll have to wait and see. But a slowdown in loan growth is a concern for broader earnings.